Good morning, traders. Today we're going to discuss how to avoid Elliott wave FS day trading mistakes like a pro. All right, how one can avoid Elliott wave FS day trading mistakes like a pro. Let's get started, my friend. So yesterday there was this Elliott wave pattern. Can you see on this 3-minute time frame? Are you a scalper? Are you a day trader? Are you a speculator day trading on the 3-minute time frame using the Elliott wave? A pattern. Do you use the Elliott wave theory? All right. Today I'm going to show you clearly how you can avoid Elliott wave day trading mistakes. So we are using the Euro Canadian dollar, talking about FS or Forex, but what we are about to discuss is applicable to Elliott wave day trading in general. All right. So here we are. So yesterday there was this beautiful, gorgeous zigzag Elliott wave pattern. All right. So for new traders who do not know, the zigzag pattern is a pattern that has the shape and the form of a zigzag. Does it look like a zigzag this? Normally, I don't know. All right, so it looks like this, okay? So we call it A, so the section here. We call this section here A for alpha, all right? We call the second section here B for Bravo. By the way, if you want to learn and master the zigzag pattern, check out our videos at 24 Elliott Waves YouTube channel. Alright, so if you see any zigzag video on YouTube by 24 Elliott Wave YouTube channel, digit 2, digit 4, Elliott Waves in plural, you can sit down and enjoy or consume that video. Alright. So the zigzag pattern has this shape here, all right? So the first part that we call A, the second part we call it B, and the third part we call it Z for Z, all right? So the first part is subdivided, can be subdivided into 5 manual wave, 1, 2, 3, 4, 5, looking a bit like an impulse wave. The second part is subdivided into 3, typical corrective wave, 1, 2, 3, and the third part is subdivided into 5, having the allure. All right, is that how you say in English? Allure. All right. The tendency of an impulse wave also subdivided into 1, 2, 3, 4, 5 manual wave. So when we say what is the formation, if somebody asks you what is the formation of the zigzag pattern, we are talking about the internal wave. We will say 5, 3, 5. All right. So here we have a zigzag pattern on a 3-minute time frame. So 1, 2, 3, 4, 5. All right. This is the A session of the zigzag pattern on this 3-minute time frame. Was clear and beautiful and gorgeous right here. So this is what we are calling the A part of the zigzag pattern. Was clear, isn't it? Now the B part was not very clear because it's not subdivided into 3. It's just this section here. All right, this section here, you will see that this is what we are talking about. So you learn something, now you start using it, you see different things, which means you are facing different challenges, you are gaining more experience, you are maturing, and by the time you know, you start fighting like a donkey. All right, this to make you laugh a bit. All right. So here we are. So this is the B section of the zigzags. Then we have 1, 2, 3, 4, 5. You see where I place my vertical line? Right there. Then we have the C part of the zigzag. So the zigzag pattern on this 3-minute time frame has started right here. Okay, I'll put another red line there so you can see on your chart as a day trader, 3-minute time frame, okay, my favorite time frame. So here we are, has been formed, okay. So it was clear and neat for me that a zigzag pattern has been formed. So because we don't want to commit a typical day trading mistake, which means we don't want to trade using a 3-minute time frame alone, I went to the hourly time frame to investigate what has generated this beautiful zigzag pattern on a 3-minute time frame, which trading setup has generated, okay, this Elliott wave pattern. We know that there is a direct link, okay, talking about validation of wave count between the hourly time frame and the 3-minute time frame. Yes or no? We know it already, all right? So I went to the daily chart to investigate what's going on. And what did I see here, my friend? Here it is. You see my vertical line. I've drawn a 3-minute time frame. And I saw that, in fact, my beautiful stochastic 833 has given me, okay, a bullish setup. So when a stochastic form a high, and that high is in overbought zone, and followed by a lower high that is not in overbought zone, and a stochastic becomes oversold, this is a typical bullish stochastic pattern. So remember, the pattern is being formed. You see where I placed the second vertical line. That's where the pattern is completed. Do you remember? Still here, you see my zigzag pattern or the 3-minute time frame is here. So has ended here, alerting me though. So we have a combination of something happening here. A trading setup by the stochastic 833, telling me that there is a bullish opportunity here to buy. All right. Now, looking at the price structure as an architect, as a surgeon, all right. So if you are an Elliott wave trader, you are a kind of a surgeon in the financial market. You are a kind of architect. You look at the plan, all right. You look at the structure of the price action. You are like a surgeon. You look inside the price. You want to understand what's going on. So now we have a trading setup, a bullish trading setup on a daily chart. Not only that, apart from the stochastic pattern that has been formed here, I have noticed something very interesting, because one thing I say to trader, you want to buy, you want to make sure you buy at a support level. Yes or no? Okay. So here we are. There is a support level here. You see, on the hourly time frame, we see that there is a support level here. This is what I'm telling you. Okay. We are talking about how to avoid Elliott wave FS day trading mistakes like a pro. All right. So there is a support below that level. But remember that on the 3-minute time frame, okay, let's go back there, because I don't want the video to be too long. So that's why I'm speaking a little bit fast. Okay, traders say they love my accent, which is good for the first time. All right. Okay. Now, this to make you laugh. Okay, laugh, keep laughing, my friend. So we know that our zigzag pattern is completed right here. Okay, it's completed right here. So at this point in time, let's put. Though I'm making you laugh, I'm quite serious though. So the zigzag pattern is completed at 14675. Okay, the financial instrument that we are looking at is the Euro Canadian dollar. Okay, remember that we are comparing the euro to the Canadian dollar. All right, this currency pair, two currencies, one for the euro, one for the Canadians. Okay, so here we are. So the pattern is completed at 14675. But when we went to the daily chart, which has a direct link, if you are trading Elliott, you have to know the correlation between the time frame. All right, daily chart, hourly time frame, 3-minute time frame, monthly chart, daily chart. Okay, and so on and so on. So now, the pattern is completed at 14675, but there is a better support level below 146, okay, 54. All right. So we can say now, how much is that? 21 pips different between this support and the one below. But the support level below is a better support level, because if we go to the hourly time frame, we can see that the professional, okay, the smart professional will prefer to buy at 14654 instead of okay, where the pattern has been completed at. They don't want to buy, they will prefer to buy at a better support level where the price forming a better support level. So one thing, another day trading mistake that traders are making, so though the pattern is completed at 14675, all right, I want you to understand this so you don't get into the trap next time, okay? A lot of Elliott wave trader will jump into the trade and buy straight away at 14675. Instead of thinking like a professional trader and say, look, the pattern is completed, but I will prefer to buy at 14654 instead of 14675. Now, you want to understand how the most sophisticated traders trade, all right? They do care about risk control, all right? So when I start trading first, I say this 100 times. Whenever I see a video on YouTube about risk control or risk management, I never watch it. In fact, I do not care about those videos. But then I keep losing like a donkey, all right? Then I understand that, okay, there's something to do with risk control, all right? So you want to start thinking like that. So you want to control the risk. Yes, the pattern is completed, or maybe a trading signal is fired at 14675, but there is a better support a little bit below. Let's see whether the market will bring it there. And this is what exactly the price has done to that level. This is not the end of this tutorial. There's more I want to show you how you can avoid a day trading mistake. So this is one example, okay? Now, I want you to go back again to the 3-minute time frame, and we're going to go a little bit deeper, okay? So you will also notice that I always say to traders that one should always combine the technical analysis with the fundamental. So I said this 100 times, a trader get a little bit fed up with me and say, George, shut up, all right? But I understand. And now today again, allow me to say the same thing. One will always combine the technical analysis with the fundamental, okay? And here this was a good example here when I was saying to forex trader that in fact one should not trade forex if one, okay, does not care about the economy news. So this is what I said before. Don't trade forex if you do not care about the economy news. So one thing that I say to TSTW24 trader, we talk about the gap period. So a market is open, all right. The first 2 hours is the best time for day trading, all right. So New York is open first 2 hours. London is open first 2 hours, all right. Tokyo is open. No, not Tokyo. Hong Kong is open first 2 hours. So we do not recommend the Asian session to traders because there's not much going on, all right? It's too illiquid, all right? So then we have the gap period, all right? So look at the time. If you look below here, you say 8, you see 8, 7. Can you see 7, 8, 9? This is Eastern time. So 7 a.m. Eastern time. All right, you can see the P here. You see here 12 p.m. Eastern time, 1 p.m. Eastern time. So this is the time, all right? So the setup was completed around 8 a.m. Eastern time. Now, as a forex trader, what do we have between 8 a.m. and 9 a.m. Eastern time? Now, let me put it to you in a different way. What's happening in the forex market between 1 p.m. London time and 2 p.m. London time? What? Which is 8 a.m. to 9 a.m. Eastern time. We have the economy news. So as a forex trader, we see the pattern like this. The next step to avoid, Elliott wave day trading mistakes is to combine the technical analysis with the fundamental. So we will say, all right, this is not a good time for day trading. We are aware of it. Let's go and check the economy news. Now we are trading the euro Canadian dollar. So we want to check, do we have any economy news, high impact economy news related to the euro or the Canadian dollar? All right, that will make sense. Or is there any other economy news that may influence the euro Canadian dollar? And we want to know before we buy. So sometimes we don't want to know. If you don't want to know, you just want to scalp you peacefully. So you want to control the risk. Use 10 pip, tiny stop loss, which is a speculative trade. If they take you out, you just blink, blink, blink. Okay, move on like nothing has happened, all right? But if you want to grab a better pips and know that because after this move down, there's a high chance the price will go up. You see the price start going up first. But then look what's happening. Look at the tall candle. This is what I'm talking about, the tall candle. So if you don't check the economy news, this kind of tall candle can mess up your trade. You don't want that. See here? You don't want that. Tall candle. This is economy news that has pushed the price to the better support level. So the first mistake that an Elliott wave trader will make here is to buy straight away at 14675, okay, instead of being a little bit patient and say, I would prefer, like a professional trader, 14654 below, okay? The next trading mistake that one will make, though one is perfectly right. So if you buy here, you look, if you don't have a strong stop loss, you are taking out. But your point, your analysis is correct because later on, look, the price went up the whole day. You were correct, but just few things has happened here, and look, the price went down. So the second mistake that you want to avoid as an Elliott wave trader, never discount other traders. Never discount the economy news. Never discount the fundamental, never discount the basic market principles. So here, if we go to Forex Factory, which I recommend to all Forex traders, this is it. Can you check it? Let's see. Can you see Friday, the 30th of September? That's yesterday, all right? So we are looking at around 8:30 a.m. Eastern Time. Let's go to the chart. Can you see where I place the vertical line? I'm going to show you. I want you to look at this session. Keep your eyes here. Don't move it. Just keep looking here. You will see some information coming up there soon. Okay, now check the time. You can say Friday the 9th. Okay, Friday the 30th. Friday September 30th, 8:15 a.m. Can you see 08? All right, 15:00 in that session. I'm talking about this session here. Keep looking there, and you will see there. Hold on, please. It's coming up. Can you see? Friday, September the 30th, 2016, 08:15:00 a.m. Euro, Canadian dollar. Can you see? That's 8:15 exactly that the pattern is completed. At the same time, we have economy news that are released around 8:30. Look, which is regarding which currency? Look at it's Canadian dollar, Canadian dollar, Canadian dollar, US dollar, US dollar, US dollar. So we are talking about which currency pair? The Euro, Canadian dollar. Let's check those economy news. After the economy news is released, look, good news for the Canadian dollar. Okay, you see, when you see the green one like this, it's good news. Red one bearish. All right, good news for the Canadian dollar. Okay, just a little bit of bad news, but two good news, one bad news, good news all together. All right, for the Canadian dollar. So what will happen to the Euro Canadian dollar? So which means we have the Euro Canadian dollar has some good news, fundamental are improving. What will happen for the Euro Canadian dollar? It will go down in normal condition. All right, in normal condition. Here it is, it went down. In fact, the market was trading correctly because they were selling it, the Euro Canadian, they were selling it. And then the news come out. They don't want to come out of their bearish trade. They sell it one more time. This move, this section here, I want to show you this section here is just, okay, to bring the price to the better support level. They were selling it correctly. They could have come out of the bearish trade, but after the news, they say, yes, we told you that the economy news for the Canadian dollar will be bullish, and then we were selling, we were correct to sell. This is the last celebration. Another thing I need to say to trader, after a high volatility, we have a low volatility, a possible reversal. Oh, you didn't get it. You didn't get it. After a high volatility usually followed by low. Is the high volatility period is usually followed by a low volatility period and a possible reversal. Now here we are, we see a zigzag pattern that is completed, and now we have a high volatility and a low volatility, a possible one, a reversal. So you were completely right to buy here, but your timing is not correct at 146.75. Your place also was wrong because normally better place to buy is a 146.54. All right, now this is the time to buy, and here it is. You were perfectly right, and look, boom, 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 boom. Now it's going up. What? Do you find this video useful, or have you been making a similar mistake before? This is what I say. A lot of traders can trade, but sometimes they are just repeating the same mistake over and over. What I would suggest, be a little bit, pull back a bit, all right? Whenever you feel like placing the trade, okay, that's why I say to you, use limit order, don't use market order to buy or to sell. That will allow you to pull back. You don't rush. So here, a better strategy, but you can be kicked out, take out because the price went up a bit before coming down. Limit order to enter the trade, all right? Combine the technical analysis with the fundamentals, very important. Always you want to buy at the best place, at the best, buy at the best support level. You want to sell, make sure you are selling at the resistance level. If there's another resistance ahead, watch it out, okay? Watch it, all right? I hope you found this video also useful, okay, to avoid, okay, to start improving your Elliott Wave FS trading, your Elliott Wave trading in general, all right, and, okay, make a better, okay, Elliott Wave trading decisions. We are the TSTW24 traders talking about how to avoid Elliott Wave FS day trading mistakes like a pro. If you have any question or suggestion, all right, my friend, put in the comment section, and in due course, I will be busy recording another video to answer your specific question. Have you been making a specific Elliott wave mistake for some time? Okay, put in the comment section. We will look at it and see whether we can record another video to highlight that specific Elliott wave day trading mistake. Until the next time, enjoy yourself and be very happy. Happy trading to you all, and speak to you soon.